Good morning. Welcome to the 10 a.m. live screen show on Tuesday, July 21st, 2015. And we've really got a situation, folks, where quite frankly, I'm going to just tell you the way it is. The underneath macro market internals, negative divergences are some of the worst that I've seen, quite frankly, in the last couple of years. Currently, let me give you this. The SPY is green again, 99.46 now on the daily. We are extreme overbought, okay, on that. This is 4 days now on the SPY. The Dow Jones is down 115 points. Surprise, surprise on this market. 83.16 on there. The NASDAQ is up to a 99.09. That is limit up with Apple reporting after the close. And we have the Russell 2000 after being red 2 days, rebounding somewhat today, up nearly 5 points at a 77.18. And for all of the lack of volume yesterday, so far on the hourly SPY, yesterday at the top of the hour, we traded 12.1 million shares on our way to a 72, 74 million share day. The SPY at 10 o'clock today traded 8.3 million shares at the top of the hour. That's nearly 4 million shares less than yesterday on the volume. Folks, that's incredible. There's no other way to put it, okay? It is what it is. There is no liquidity. There is no volume. If the market decides that it's going to tank at some point on volume, it's going to go, and it's going to go big, okay? We've got the UVXY 8 days in a row red now. 8 days. And why is it red? It has nothing to do with the markets per se. There is no volume, and when there is no volume, you have no volatility. Currently, 8 days in a row, 2.51 right now on the UVXY, and the straight VIX is red at a 3.95 after having a little bit of a green day yesterday. So there is absolutely no volatility in the market at the bottom of the risk range on these volatility indexes. That never ends well. Okay, so by the way, Facebook, I wanted to show you this. One of the on the street, one of the big major firms decided to put it a tier 1 buyout on, make it one of their top candidates at a 98.19. 3 days way outside of the top of the risk range, they decided to come out and put a buyout on Facebook. That's got to make you feel good on there. One thing, I'm going to diverge a little bit because there's really nothing to look at to buy here, but I'm going to digress a bit here and talk about a little bit about this gold situation, of which, as everybody knows, I have been long the gold miners for the better part of, I don't know, over a week, 2 weeks, something like that. All right, timing is wrong, you know, the whole 9 yards, no problems. I get it. All right, but there's something going on here underneath the surface as far as gold and the markets are concerned. And the big issue here is they're butting heads right now. You've got deflation on the one hand because of, you know, demographics, technology, the amount of global debt, the strong dollar. Strong dollar's deflationary. That's no argument. That is what it is. All right, it's deflationary. So you're on the one hand, you got deflation. On the other hand, you've got the Federal Reserve and their policy and their money printing and their quantitative easing, doing everything they can to create inflation. So the two forces are butting heads. All right, the natural forces butting heads. Who's going to win? I don't know. Okay, who's ultimately going to win? Is inflation going to be created based on what the Fed policies are and have been for the last 5 years, that they have not been able to create inflation? Chances, high probability, no, they're not going to be able to create inflation. Or how's inflation going to be created in a deflationary environment with a strong dollar? There's normally one other way for that to occur. And they start buying gold and increasing the price of gold. Now, China came out earlier or late last week saying, they bought so much gold. The estimates were a lot lower than was expected, blah, 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 so on and so forth. Look, they're not going to tell you they're buying gold hand over fist. They'd like the price to be low so they can be buying this gold and accumulate. So I never believe what they have to say. So we've got some forces butting heads here. And I want to show you this, and I'm going to start with the dollar here on a quarterly basis here. Let me go to the DXYO instead here. On a quarterly, now this is your quarterly time frame, so I'm starting backwards. At the end of March, the number was a 95, overbought on the quarterly basis. The monthly basis, it was near, well, it was near extraordinarily overbought. It was extreme overbought, making its way down. This is the dollar now. All right, weekly, we were having our, a rebound off of an oversold condition. And of course, here's the daily at a 98.59. Now this compares to a gold quarterly at a 0.25 with a monthly looking at an 18.44 heading down, but I call your attention to it never got overbought on the monthly, going all the way back. The last time gold was overbought on a monthly basis was not here, but it was here. The month ending December 31st, 2010. That's the last time gold was overbought. And then you have your weekly at a 2.33 right now, and of course your daily at it's up today here at a 9.97. So you got the dollar, the strong dollar. You've got the gold. All right, who's going to win that battle? Where is inflation going to come from? The Fed needs inflation to raise rates. They've said it. They need inflation to raise interest rates. Inflation ain't happening. How's it going to happen? They've been trying for 5 years with their money printing, their quantitative easing, the policies, the whole bit. Hasn't happened. There's going to come a point where all of a sudden gold, after I don't know how many years now of being down, is going to turn, because you're going to have these countries not disclosing that they're buying more gold than they're letting on, such as China. So again, that's the macro picture in multiple time frames. And whatever happened with gold yesterday had to look to me of being a blowout to the downside, a blow off to the downside. For GDX, I mean, just look at this volume bar on GDX yesterday. I can only go back to 2013, and we've never seen that type of a volume bar on the GDX. So again, there's something going on big time underneath the surface with this gold stuff. Does that mean it turns tomorrow? No. However, it's getting down low enough where these countries, I believe, are buying more gold than they're letting on. Okay. I've been wrong on the gold trade, no doubt, but I've continued to pick away at it. On Nugent, okay, it's up 12% right now. I'm just going to sit tight a little bit on there, on this thing here. But, I continued to buy it. I was wrong, yeah. Where was I buying it? I was buying it in here. Is where I was buying it, anticipating this thing to stair step higher. It never happened. All right, so I continued to buy it. So anyhow, that's what I wanted to talk about. I was, looking at this last night and studying this stuff on multiple time durations here, and something's going to give, and I don't think it's going to be the dollar to continue to get strong. Strong dollar's deflationary. The Fed can't raise rates under those types of scenarios. When you get a strong dollar with the amount of debt around the world and these other currencies just tanking, that debt becomes a hell of a lot more expensive to fund, and something bad's going to happen. So that's my thought process on there. I'm going to leave it at that, and we'll do it again at 340 to see if we have any stocks at that point. Have a good day.